We are less than 2 minutes away from breaking earnings coming from Apple, a stock that has underperformed its major tech peers. Concerns that we are going to see sales fall yet again, something that has happened 5 of the last 6 quarters. And in fact, this sales slump, if it comes in consensus, would be a drop of 5%. That's the worst that we've seen in about a year. The concerns are many that it's losing market share in its handsets, particularly seeing weakness in China, and a lot of existential questions about where it is when it comes to artificial intelligence. On the flip side, bulls say that the stock has already underperformed. It's a very cashed-up business with an addictive technology, and it's got that stickiness to help drive the services business. We're going to break those numbers as they come due. We've got Doug Clinton, who's the co-founder and managing partner at Deepwater Asset Management, and Eric Jackson, founder and president of EMJ Capital. And Eric, you own this right now in the portfolio, so I'll get to your insights as I break these numbers. Apple earnings coming just out. As I mentioned, we were expecting second quarter revenue to fall by about 5%, revenue coming in line with expectations at $90 billion, $90.75 billion. The market was at 90.3. China, which has been a key area of focus, investors were looking at revenue at $15.8 billion. This is surprising. It's a little bit better. It didn't fall as much as feared. $16.37 billion, which is a decline of only 8%. Yes, it's still a decline, but the market was prepared for something worse. Here we're taking a look at shares of Apple rallying in the after hours as it announces an additional buyback of $110 billion. I'll just let that sit with you for a moment. A buyback of an additional $110 billion in addition to boosting its quarterly dividend. So yes, there's a little bit of weakness in sales. That weakness is exactly as expected. China was not as bad as feared. It is raising its quarterly dividend to 4.2% and announcing an additional buyback of $110 billion. I'm going to dig further into those details, but Eric, just get your 2 cents on kind of that high-level perspective that I've given, and we are seeing the stock move a little bit higher here.
Yeah, I think the biggest takeaway, Amber, is the China numbers. I saw some estimates that they were expecting a 15% decline. So to come in at -8% is a big upside surprise. iPhone was better than expected. iPad, not so much, but Mac surprised. Mac had a bigger beat than was expected, and services was a beat as well. And so when you compare this quarter to last quarter really was sort of like, with the exception of iPhone, was sort of like a disappointment across the board in terms of all the different products and services, and especially China. So expectations were low going into today, and they surprised on the upside. So that's why the stock's rallying.
Yes, and on that buyback, it was a big number, and it is a big number. It's the largest ever buyback that Apple has done, and it's coming against a backdrop of slumping iPhone sales, total iPhone sales falling 10%. Doug, I mean, those are kind of the bull and bear factors here, right? Is how much can Apple paper over that by buying back stock?
Well, I think overall, the quarter feels like kind of a sigh of relief quarter. We knew that revenue was very likely to be down year over year. There is some bit of a comp issue there. If you adjust for that, it may be maybe more like flat year over year. But I think the overall takeaway from what we're seeing here is, iPhone's been weak. We've seen that for several quarters. We're sort of due for a bigger upgrade cycle later this year. And I think now that we've gotten out of this quarter, next, we're going to start looking at WWDC and potentially some new products on the AI front there. The question is really, how should we think about Apple in the back half? Could we get a bigger iPhone upgrade finally after a couple of years of more modest upgrades? And could that new product be powered by AI? And could that really start moving numbers in the right direction?
The services revenue did grew a little bit more than expected and hitting a record. Is this enough, Doug, to, for investors to kind of focus on? Can they just get comfortable with the iPhone struggling here, to your point, until there is a product refresh?
I think they sort of have to. And the reality is, I mean, you look at the stock, it's sort of been in the doghouse with investors this year. And so, services obviously has been a strong point in the business, continues to be, I think, a strong point for the business. And again, it comes back to AI, as simple as that might be. I think the reason that the stock has been challenged this year is not just that, numbers have been flattish to down. That's part of the story. But we all sort of knew that that has been the trajectory more recently because we haven't had big product cycle refreshes. We're sort of waiting on those refreshes. I think the question just is, what is Apple going to do in the AI arena? And I think investors have just sort of sat on the sidelines because they're not sure if AI is going to impact that services number. Are they going to bring out new services, new things that people subscribe for? Or is AI just going to be a driver that ultimately helps them sell more iPhones? We should learn more about that, not today on the call, but probably June at WWDC.
Eric, you own the stock. Why?
I just think the sentiment got really washed out over the last couple of weeks to a month. It seemed like everybody was sort of saying that the good times are over, and as if we're all going to be using Samsung phones from now on. And I just think there seems to be a limit in terms of how low this stock can go. Getting back into the 160s, I think, was sort of the lower limit. We have the WWDC to look forward to, like Doug said. I hope there's not maybe too much hype attached to that now and what kind of AI announcements they might make. But I just think they're going to find ways to grow the business. Obviously, Vision Pro wasn't it, but they are just too big, too valuable, too relied on by too many folks to not think that they're going to hit a floor and be able to pull some levers, especially China. A couple of years ago, they had a really disastrous China quarter. I think it was 2018 or something like that. And a lot of people said, well, that's it. And they came back basically the next quarter with some, big surprise to the upside in China. And they obviously spent a lot of time over there. So I still think it's just this is a good time to kind of enter the stock when the pessimism has been so high.
I just want to underline the point that I made about the buyback, $110 billion. It's not just a record for Apple. It is a record ever announced by any company. The previous record was held by Apple when they announced one in 2018 of $100 billion, but adding $110 billion, it's a record buyback that we've seen for any company.
I wonder how many of the S&P 500, Amber, have a market cap over 110
That's right. Yeah, exactly. Doug, what would it take for you to get more constructive on Apple?
We own Google and we own Meta in the Mag 7 group, and we felt good about both of those stocks this year. And again, I feel like I sound like a broken record, but we really do believe that AI is a meaningful paradigm shift in technology. We think that it will be a key driver for revenue for all of these mega cap tech companies, and I don't think Apple's an exception to that. So when we think about what would get us more excited for Apple, I would love to see a little bit more in terms of what are their plans with AI. We hear these rumors, maybe they partner with Google, maybe they partner with OpenAI. They're starting to drip out a little bit of some of the generative model work that they are doing. But seeing more substance there, I think, would help me get more comfortable that they do have a real plan going into AI. And the one thing we might learn on the call today related to that is how they're thinking about CapEx. Because CapEx has been the big topic with all of the mega cap tech companies this earnings cycle. Google, Meta, Amazon, Microsoft, they've all talked about spending more, investing in infrastructure, building out data centers for AI. Apple only spends $10 billion a year in CapEx. Google and Meta spend that in a quarter. And so I think it would be helpful to hear how Apple's thinking about potentially ramping that CapEx, because that might be a bit of a window into how serious they are about AI.